Three big things of getting a loan approved is going to be income, your DTI, your debt to income, and your credit score. Check Credit Karma, so I may be slightly off here, but one of the big ones that we see that's going to affect the mortgage process and your credit score is credit utilization. And it's going to affect both your credit score and your mortgage approval, because we're looking at debt to income, and the more utilization, so the more balance you have on your, let's say, credit cards,
Right.
or your car payment, that's going to affect your debt to income ratio, which will affect how much you can actually get approved for a mortgage. But it's also going to bring your credit score down. So typically the magic number is anything under 30% total utilization for revolving credit. So this would be like credit cards. That's going to help your credit score, anything under 30. But really, the magic number is going to be that 9%.
Right.
So you want to keep your total utilization under 9%, and then your credit score will actually go up. Anything over that, then it starts to go down after that 9%, and after 30, it starts to decline quite rapidly. On-time payment and payment history is huge, and if you miss a payment, even if it's 30 days late, so there's 30, 60, 90, 120 days late. Those are kind of the different categories.
And then how late until it goes into collections generally?
It's up to the creditor, but typically it's going to be after 120 days. Your credit score is going to degrade very, very quickly, and then it's also going to affect what type of loan programs that you can get approved for. So some guidelines on certain programs are a little bit stricter than other programs. So it's really going to dictate your home buying process once they go into collection. So definitely avoid that. And any late payments are going to stay on your credit report for 7 years. So this is going to haunt you for a very long time. So definitely on-time payments, credit utilization, two huge categories when making up your credit score. CreditKarma.com will show you all of that. So, and it'll tell you, it'll give you a roadmap of how to improve your credit. But paying off your collection accounts going to be huge. Pay off your collection accounts, pay down your credit cards, all going to be huge. With that being said, if you're close to the home to purchasing a home, if you're within 3 to 6 months, let's have a conversation first. Let's talk about it. Each situation is very different. So what we're going to be looking for is how much money do you have for down payment and closing costs, and versus what is your debt to income ratio, and let's say your credit card's at $8,000. Do we put that?
Right.
Let's say you have $8,000 towards closing costs, or do we put it towards your credit card? So that's going to be something that's very case by case and situational. So definitely want to talk through that before you go paying off a credit card. Absolutely.
Let's just touch a little bit on COVID while we're talking about credit, because I think that there's that element with like the FHA loans, and I know we're going to talk about FHA loans later, but what was the requirement before? What is it now? And
so
it went back, right?
Yeah, absolutely. So good question. So as far as credit, there's a couple things we can touch on with COVID. When COVID first kind of hit, I believe it was March when kind of everything shut down. Well, here in Florida,
exactly.
But the guidelines kind of tightened up a little bit. So let's take an FHA loan. So credit scores were at 580 for approval. They bumped up to 620. Some lenders bumped up to 660 for approval, which was the minimum credit score required to get approved for an FHA. They have now gone back. So all those overlaid, what's called an overlay, kind of were rolled back, and now we're back at that 580. So which is good.